Hey, ladies and gentlemen, I'm so happy to be back. It's been so busy. I'm sweating. It's hot outside, and I'm having a great time because I hate winter. But today, we're going to update the six-figure dividend portfolio. And if many of you are following this channel, you know I've been trying to get a line of credit, maybe buy an online business or a piece of real estate. I finally did my meeting with the bank about RRSPs and how to leverage some money, and I'm going to update you on that tomorrow. I'm going to say there's a little bit of a surprise, but there's so much going on in the markets today, guys, and I look so forward to breaking this down. So let's jump right into this. Welcome back, passive income investors alike. Today, let's update the six-figure dividend portfolio. We came back with an utter vengeance. We are touching all-time highs in both the accounts, well, the combined total of the accounts yet again, sitting at a whopping $111,992 total as of this very moment. And my dividends, because the Canadian dollar, as many of you may know, most of my assets are in the US. When the Canadian dollar fluctuates, even if I buy dividends and I start reaching those highs, I get really annoyed because sometimes the dollar will rally up. So if I buy US assets in Canadian dollars and then the Canadian dollar goes up, that means my purchasing power was stronger tomorrow than it was today when I purchased it. So if you've been watching this channel, you would have known I've been buying like so many dividend stocks like last month, and here's where I've ended up as of right now at $4,742, which isn't as much as it actually was. I was just almost going to peak 4,800. I was like just like a hair away, and then all of a sudden and all started pulling back. But that's the joys of dividend investing. I know short-term pain equals long-term gain. You just got to be patient, guys, and let it grow. And a lot of you are probably thinking to yourself, I want to see the counts. I want to hear about the stocks. So we're going to head on over to the dividend portfolio. I'm going to finish up on the computer. So let's head on over, guys.
All right, ladies and gentlemen, we're just going to dive right into this. We're looking at the account still up around 5,000, where it's been holding pretty good. It's usually between the $4,000 and $5,000 mark. We can see Apple's been on fire, finally popped over that $200 mark, which we've all been patiently awaiting. Microsoft's still one of the best performing stocks, and GEO, the volatility continues. I was green in this stock. I swear to God, go back like just a week ago and look at my dividend portfolio update, and you'll see GEO's got a lot of volatility because it is a high dividend yielding company. If we take a look really quick, I'm going to full screen this. I just realized none of this is full screen. There we go. I don't know if that made much of a difference, but look at the yield on this currently, and I honestly think this is an amazing company. I'm going to do more research and just keep up on the news in case I miss anything, but everything this time this thing dips anywhere below 20, usually there's a lot of buyers that bring it back, but there's volatility in high yielding dividend stocks. We all know that, but just going and scanning over everything, guys. We got Canadian Imperial Bank still being my worst bank, but slowly coming back. Actually, we had a lot of green today, and I want to talk about why there's so much green in these accounts. And this is my tax-free savings account along with my regular account that actually has was doing amazing at the beginning of this year, but so far it's only just come back, which leads me to question maybe we should look at the overall in comparison, because it's the end of the month, and you know what I just realized? We can actually check out the performance of these accounts. Only once a month, guys, can I do a performance update of the dividend stocks. So if we open this up here, we can see the basic account. Does it go all the way to June? Or it does too. So now we have a June rating, and in the tax-free savings account, we can see we were completely flat. So we're going to open up both accounts, do a side-by-side comparison here along with against the overall S&P TSX index, which is the Canadian version of the S&P 500, along with the S&P I'm having a hard time coming up with these words, talking too fast. So the S&P 500, if you do not know, is the 500 largest companies in the U.S. put into an index fund, and we're going to use that to track and manage and gauge my own account. So we've added the two accounts along with the two basic indices, and we're going to let that apply, which usually takes a good second here, so just bear with me. And as we take a look, we can see the volatility in this one account is just staggering, but as we can see, the actual S&P 500 index is slowly creeping up toward my line, which is starting to say that maybe I might be better off holding some S&P 500 indexes over trying to manage my own funds. But because a lot of these stocks were recently purchased, and we can see with a little bit of the run they had at the beginning of the year, we severely outperformed the market, only to come back down to right to about market average. But luckily, we are still beating the market averages, guys, by quite a healthy amount in my tax-free savings account. So we're going to see where that goes. But it's kind of funny with the companies I own, because the companies I own in my TFSA make up most of the biggest companies held in the S&P 500 index. So we find there's a very similar correlation between this blue line and the light dotted blue line, and that light dotted blue line is the S&P 500, and the blue line is my TFSA. And we can see even into June we get a little bit of a bump, but it looks like my bump was a little lower than the bump down here. But I also own some volatile companies in my tax-free savings account. Now, I'm going to get back to that in a moment, but let's just head over to the accounts and analyze why the markets have been coming back with a vengeance. And it has a lot to do with the tariff man himself. Just right, Trump suspends tariffs on board games and toys in China. Like, he's starting to come back to try and rally the market. And a lot of people are saying this because we have election season coming up soon, and most people only re-win elections by having a balmy, awesome market. But this is kind of a reminder of why you want to be in the stock market at all times, even on the down days. I remember somebody saying, I don't know the exact quote, but there's a handful of times that most of the money in the market is made. There's only a few times rallies go really insane, especially when you're buying like indexes. And it's funny how beaten up the stocks can get, and out of nowhere, it's like billions of dollars just flood back into the market. And you always have to be aware that when money comes out of the stock market, it's usually sitting on the sidelines waiting to re-enter into the stock market. So you have to understand that as well, and just be frugally patient sometimes with your positions, especially if you've done your due diligence. But that's what brought my entire portfolio back. This account isn't doing as great because MO, even though we are above my average buy price, we still have the Canadian dollar kind of beating me into the ground. Same with Tesla, but I'm happy with these positions. I'm comfortable with them. And tomorrow what I'm going to do, guys, is update you on what I plan on doing with these accounts. Now that I've actually talked to the banks, I've opened up an RRSP, and I want to show you how I'm going to manage my retirement savings account so I can leverage it into real estate, hopefully in 2 to 3 years from now, along with trying to buy an online business. And that is a lot to comprehend all at once. So I'm not going to break it down in this video. I'm going to make a separate video tomorrow specifically just about my RRSP and what I plan on doing with these stocks, because like I said, I have to pay tax on almost all of these companies except for Tesla. I think I bought Tesla with a little bit of money I had extra from last year, but this year most of this money you see in this account specifically comes from my income, and it also comes from it's mainly just money I'm going to have to pay tax on, and I'm finding a way to mitigate that and avoid it, and I'm going to try and transfer most of these positions into my TFSA. But like I said, I will save that story for another day. But for you dividend grinders out there, we're going to for you guys, and I'm really looking forward to the month of June. Like, we're already in July. I'm so lost. I keep forgetting that we just passed June. I'm so lost. So I mean, we got these 3 payments. We got July, these 3 major payments coming in from some of my biggest holdings, including Bank of Nova Scotia, Canadian Imperial Bank, and Northland Power. My monthly pair will all be combining about a $700 payment. I think 500 or 700, I don't know, I can't remember the exact. I think it's 500 something in this account, and then in this account we also have payments coming in, one payment coming in from Altria Group, which is going to be the equal amount of $100 and something. And if I added my math correctly from last video, I think I'm getting right around $700 combined in dividend income. But we can see over time what my payments look like up here. A lot of you seem to enjoy Scotiabank's payment structure because they tell you how much you're going to make month over month, though this is a projection and doesn't include the dollar valuation change. And I will also explain more about that later. But if you guys want to see the exact dividend amount, you can just take this and add it to this, and you'll see you'll end up with the amount that I told you, which was $4,742 as it stands in this moment. But if the dollar drops again, guys, we could see this go right back up, or if the dollar continues to rally, we could see this go down along with my account numbers. But it's always fun to take a peek. I hope you guys enjoy this quick visit to my 6-figure dividend portfolio now that Trump opened his mouth and recovered everything, which is usually how the markets work. So stay cool, guys. I look forward to updating you tomorrow. So stay awesome, and we'll chat to you real soon.